We have Rupesh who sent in a question now. He says that he's planning to buy a home that costs around 33 lakh rupees. He has an annual salary of 6 lakh rupees. How much loan amount is he eligible for? Will demonetization affect loan interest rates? We'll come to the demonetization bit a little later, Ram. First, if we could cover loan eligibility.
Right. So in this case, Rupesh, loan eligibility depends on two things. One is, you can get a loan of up to 75 to 80% of the cost of the property or the selling price of the property. In this case, you have said 33 lakhs. So I would assume a loan of about 25 to 27 lakhs is the maximum that any person can get, because the rest of it you will be expected to pay as down payment. There was a time when banks were hyper aggressive and giving 90% of the project as loan, but I think RBI has come down on that. Today the number is more like 75 to 80%. Now coming to how much you will get based on your eligibility, again, a rule of thumb you can use, very broadly speaking, is for a salaried person, 60 times of your net take-home income monthly is a loan that you can look forward to. Here, of course, I'm making several assumptions in terms of you not having any other loans going on, or any default in your history. If none of that exists, you can expect a loan of 60 times of your take-home monthly income. So in your case, you have a gross income of 6 lakhs. So I assume that your monthly take-home would be somewhere around 40 to 45,000. So you should be able to get a loan of 25 lakhs, unless there is some other circumstance due to which you have a problem.
Ram, you just mentioned how this I'm gathering is how banks essentially calculate, banks or lenders essentially calculate your home finance eligibility. But to be financially prudent, how much of your money, how much of your income should actually go towards servicing EMIs? And here I'm talking all the loans that you've probably taken. It could be a home loan, personal loan, car loan, etc. All put together should be how much of your income?
That depends on a few factors, including your age, and also whether you have a double income household or a single income household, and so on. I would say for a home, especially for a home, because it's an asset which is very much required. It's also an appreciating asset in general. Probably 50-60% of your income going towards EMI, obviously for a period of time, for 5-6 years, is fine.
That is if you only have a home loan.
That's right. That's right. For any other asset, so for example, an asset for any other loan, for example, a personal loan or something where you're not really building up an asset for yourself, I would peg that number much lower. You should, in general, we recommend to our customers not to take personal loans and so on, which will further add to your monthly outflow burden. But a home loan is an exception, simply because it's an asset that you do need to have. So having a pinch for 5-6 years where you are paying substantial part of your salary towards EMI is reasonable.
Right. Also, the other question that he asked about demonetization and its impact on interest rates, which is in fact become a very popular question of late. We did see that the RBI did nothing in the credit policy. They didn't really reduce the repo rate, though it was widely expected. But do you really see interest rates going down?
So I think interest rates, there are two parts to what happens to the realty or home buying because of demonetization. I think the bigger impact is likely to be the prices of homes themselves. Now, while it's too early to see any impact in the market yet, there is a widespread feeling that there could be a correction in the prices of homes per se. Of course, it will depend on the location. It will depend on whether it's a luxury property or a middle income property.
But yeah, I would hate to play spoiler over here, but the fact is there are a lot of these WhatsApp messages doing the rounds saying that home prices are going to crash 50% and 60% and all of that. Now we've been discussing the impact of demonetization on home prices for the last couple of weeks, and what we've gathered is this, that yes, you will see some pressure on prices. You might see prices coming off a bit, but do not expect it to the tune of 50 to 60%. You could expect something in the range of 5 to 20%, depending on the market, depending on the financial condition of the developer concerned, depending on how far ahead the project has actually progressed. So there are a lot of factors at play here, but 50 to 60% is a bit too much. And we've really not heard any expert actually come on the channel and say 50 to 60% correction prices. Ram, you were talking about interest rates.
Yeah, I agree with that. Now coming to interest rates, as you mentioned, RBI has held rates stable as of yesterday. Given that, banks may not immediately go down to reducing the lending rates, but we'll have to watch this closely in the coming quarter or so, because I'm sure the RBI has a close eye on the GDP numbers and several other variables, inflation and so on, and will take whatever steps are required to mitigate any adverse impact of demonetization. The broad trend in interest rates is expected to be gently downwards. Now, how much and how soon? It's a little premature to say that. It will really depend on how the GDP numbers for the Q3 and Q4 of this year look. And accordingly, the banks will respond in terms of reducing their lending rates accordingly.
Right, so you'll have to wait some more time for those interest rates to come off. But we have seen a couple of announcements in the last few weeks which were leading up to the policy. In fact, so I guess it's a good time to switch home loans. Would you say that? If you are in the market, if you are a borrower already, and you are at a higher interest rate, and like you pointed out, if you're getting like a 0.4% or more differential.
Yeah, I think the differential, exactly. I think it depends on what is the differential that you're seeing, depending on when you have taken your existing loan. If you have taken it fairly recently in the last 1.5 years, you may not see a huge differential yet. In that case, it's not worth your while to go for a switch. But if you have taken it longer in the past, where your rates were north of 10%, then yes, you can go in for a switch.
So, and what if I'm in the last few years of my home loan? Does it make sense for me to switch? Say last couple of years.
Right. So in the last couple of years, it'll, I would say not. It will, you can do an exact math depending on how many EMIs are left, and what's the outstanding principal, what's the interest rate differential. But in general, it is more beneficial in the initial period of your
So that's some number crunching that you will have to do if you're a borrower in this home loan market.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/magicbricksnow. And don't forget to click the like button. You can also follow us on Twitter at magicbricksnow. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/magicbricksnow.